you a saver? Do you believe that cash really is the safest investment you can make? Do you like the security of having your money protected by banks that are designed to do just that? Well, if you do, I've got news for you. You are screwed. Yes, you are. Around the same time last year, we witnessed the collapse of very notable financial institutions like Silvergate Bank, Silicon Valley Bank, Signature Bank, and even First Republic Bank. Now this year, however, the New York Community Bank has been the one that's been grabbing the headlines due to its disappointing financial results. This downturn was largely due to the setbacks from 2 commercial real estate loans inherited from Signature Bank, among other non-performing debts. But this issue is not isolated. Pam and Russ Martins at WallStreetParade.com have spotlighted several other banks that also face difficulties. US Bancorp, the 5th largest bank, has lost over 30% of its market value in just the past 2 years. KeyBank, the 22nd largest bank, has lost 50% of its value in the same time period. Comerica, the 32nd largest bank, has also lost 50% of its market value in just the same span. Western Alliance Bank, 35th largest, lost 45%. Valley National Bank, number 37 on the list, lost 43% of its common stock market value in just the past 2 years. First Foundation Bank has seen its share price lose 70% of its market value in again the last 2-year span. If New York Community Bank or any of these previously mentioned banks were to fail, it would likely be due to these 2 reasons. Number 1, mismanagement of bad debt, particularly through bonds. Losses related to the commercial real estate, CRE as they call it in the industry. It's noteworthy that a significant portion of CRE loans in the US are held by regional banks. A report by Reuters highlighted the impact of New York Community Bank's recent earnings announcement, which led to a 60% plummet in stock price. This situation has drawn attention to the portfolios of regional banks, which are responsible for nearly 70% of the outstanding CRE loans, as per Apollo's research. Banks that are particularly vulnerable due to their CRE loan exposure include the ones on this image right here. Now, as these losses accumulate, more banks are likely to find themselves in the news and not for good reasons. To address these issues, the Federal Reserve has taken steps to stabilize our banking system and the broader economy by introducing the Bank Term Funding Program. They call that the BTFP for short. This program was designed as a safety net for banks experiencing losses, but has also been criticized for being exploited by some banks for arbitrage opportunities. Check out this one right here. However, the Fed plans to discontinue the BTFP by March 11, 2024 in favor of strengthening another mechanism, the Federal Reserve's discount window. According to Bloomberg, US regulators are set to mandate that banks use the discount window at least once a year. This move helps eliminate the stigma associated with borrowing from the facility, which was historically seen as a bank's last resort before insolvency. The introduction of mandatory annual borrowing from the discount window is an attempt to normalize and use it prepares banks for financial difficulties without signaling weakness to the market, people like us. This approach seeks to address the ongoing issue of regional and some national banks teetering off the brink of insolvency, offering a more stable foundation for the banking sector moving forward. So what should you do, Joe Investor? My advice is to diversify. While an emergency fund is important in the form of cash, you have to make sure you have enough assets that will be less vulnerable to government screw-ups or local financial disasters like bank insolvencies. Guys, they're on the horizon. They are coming. I've said this before, they're coming. So you can invest in cryptocurrencies. You can invest in gold. You can invest in silver. These are all places I'm parking money right now. Save your wealth, but do not put it all in cash, stocks, or mutual funds, because if you do not have any diversification, well, now's the time. I'll come back and say I told you so. Links are below if you want to get invested in precious metals investing. Cryptocurrency you can find on your own depending on where you live. There's different exchanges, obviously Coinbase being the largest one. But if you're not diversified right now, with banks perhaps failing, New York Community Bank, we saw what happened to them. That's a very large bank. US Bancorp, 5th biggest in the nation. My father worked there for 35 years. It's failing. It's losing market value. I don't think it's going to collapse. But regional banks? Yeah, there's going to be a few. We're not in a great place. Act now, diversify, because this economy and the world we live in is very crazy. And if you're all in on cash, you're going to wake up one day and say, I had the opportunity to put money in precious metals. I had the opportunity to get into Bitcoin, which is but on a massive surge. And some say it's only going higher. We're getting near the halving point. Take my advice. Don't take my advice. We will come back and remind you. We told you to diversify. I'm Tim with Tag Economy. I will see you next time. Hopefully it's better news.